presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come and parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great, Adam. Yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So,
well, we appreciate you growling problem with us.
Yeah, sir. I've done gold reports and all the softwares and all your books and read it. Generational thank you.
You are. Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
Welcome, folks. This is Jacob Shoup filling in for Tom O'Brien today. As I said yesterday, let us take a look at what we've got going on right now. Well, again, the market not doing too much right now. The E-mini up about 0.41%. The SPY up about obviously the same, trading at 523. The Russell futures up nearly a full percent at 0.9. NQs 0.58. Dow futures up 0.27%. That gold contract actually doing okay today. Figured out the monthly here. Silver up 1.29, and copper continues to make its move higher. We're trading at the 488 area. Can this go to 5? Maybe. It did hit 5 briefly above that, 502, on some pretty strong volume that day. Of course, did close a little bit lower than that, but we're still moving up. Not as much volume today. Remains to be seen. Of course, you have companies, copper miners, even like FCX today, doing pretty well. I think FCX up about 2.3 currently. Crude futures down $78. Which is actually interesting to see. I'm following just energy in general, but specifically the crude, because you get a lot of this conflicting news of what's going on. For instance, you have, I believe it's Nigeria, where they have actually one of the, I think the 7th largest reserve of light sweet crude in the world, and they were holding it all for the value of the contract to go up, and it's not. I think there's just a lot of supply, really. Even going in to some of the hotter months as well. Here in Florida, we have a big storm today on the West Coast, but I mean, it's hot now, right? So we'll see what happens with that. It is interesting to see this, continuing to kind of go down. We're looking at Steel Dynamics up at 135. Tesla back up a little bit at 3%. Still trading at 177. And the dollar is coming down a little bit off of the mid 105 area to 105 right now. And we'll see if we can get back down to that 104.52 level. Disney not doing anything at all. Meta not doing much at all. Lucid blowing up yet again. And then Plug. We can talk about Plug a little bit going forward, but this is something that likes to get played on in the meme space quite a bit. And speaking of that, we can take a look at GameStop right now. 30, yeah, look at the come down on that anyways. They're fighting, but still at $42. And then AMC, I think, what is the ticker for that? AMC, yeah, again, they sold something like, I can get the number for you. They completed 250 million stock sale during the meme rally. This is pretty nuts. The movie theater operator sold 72.5 million shares in an equity offering launched in March. It raised about 250 million of new equity capital, completing the sale Monday during the revived meme stock craze. The movie theater operator sold 72.5 million shares in an at-the-market equity offering that it launched in March 28th. AMC sold that stock at an average price of $3.45. We were trading at $6.51 currently. This is so crazy. Because we opened like what? Today Tuesday? Yeah, so 13th. Opened probably about like 3, okay, let's see here. Probably like 3:30 something. Unbelievable. AMC more than doubled. It hit an intraday peak of 588. Of course, we're well above that right now. The stock closed Monday session up more than 78% at $5.19. Again, we're trading at $7.47 right now. The short sellers are getting screwed over from this. What an unbelievable kind of situation again. Anyways, I guess props to the people who rode that all the way down. Let me see if I can go in them out a little bit right now. Because look, what? Obviously, this must have been some kind of like consolidation. That's crazy. But anyways, people were buying in a lot of this massive volatility and held it all the way down. And there was a lot of hopium going on. And I guess depending on where you're at, you can get out at this price. But, sadly, when these things pop up, people buy at the top, right? I mean, that's just kind of how it goes. But anyways, interesting to see it move up on that percent. And again, I think this is going to peter out. Nobody's holding these things in reality. They're not great companies. They're at these low valuations for reasons. So if you're in it and you've made money, this isn't advice or whatever, but if I were in that position, I would get out as soon as possible because these things don't stick. They just don't. It's just kind of like a hype train. Regardless, that is pretty interesting news. We can talk a little bit about the Fed. We have, the PPI come in today, a little bit hotter than anticipated. We have CPI coming out tomorrow. I think the market's just kind of indecisive in general. I mean, we're seeing, we're up 0.545% right now. Not, maybe about half of what's usually happening. Which kind of tells me that the CPI might not be horrible, but it's not going to be great either. And I also am starting to think that, all these really good financials that came out, the good quarterlies, and the, year out economic outlook is kind of already priced in to us at a certain extent, right? Now, obviously, if CPI comes in like super hot tomorrow, then you can have some major issues, right? Because then we might, drift into the territory of, well, will another rate hike be required? Right now, the conversation is that it's not happening. We just need to keep the rates at these levels for a longer period of time. And that in and of itself, has its own implications, right? But still, I mean, we're trading up like near all-time highs, right? I mean, so we have 5,333 at the all-time high. I mean, we're at 52.69. This is the E-mini at least. In the SPY, it's going to be the same. So, 524. We're at 523 right now. So, I mean, it's hard to say what happens. I think we're going to come in a little bit hot tomorrow. We had Powell speak today. He's in Amsterdam. He said his confidence that inflation will keep cooling is not as high as it was at the start of the year, and that the central bank will need to be patient before lowering interest rates. This is a quote from him now. We did not expect this to be a smooth road, but these inflation readings were a bit higher than I think anyone expected. He said what that has told us is that we'll need to be patient and let restrictive policy do its work. Powell said that he expects inflation will move back down on a monthly basis to levels that were more like the lower readings of last year. He goes, I would say my confidence in that is not as high as it was having seen these readings in the first 3 months of the year. So, I mean, right there, essentially saying what we have been saying here for quite a while, which is that inflation is kind of persistent. And I would make the argument, again, that this kind of traditional way of stamping it out when there's so much cash in it, spread unevenly among people, may need to be looked at in the coming, future, let's say decade out or something. Folks, stay tuned. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee, so what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. This is Jacob Shoup filling in for our man, Tom O'Brien. He will be back tomorrow, so look out for that. We take a look over here, what I'm looking at on the screen. We're at TFNN.com. Strongly recommend checking it out if you haven't yet. When you're here, we got the homepage, right? We got some of our featured content. But if you come over here to the top, you can click on Newsletters tabs. And let's look around here. We got a bunch to select from. But right now, I want you to focus on this one right here. This is the Opening Call newsletter by Basil Chapman. Now, we have Basil on every Tuesday on the Tom O'Brien Show. It is always highly informative. He is on at 10 a.m. Eastern Time. And listen, if you're trying to learn and really apply something, right? Like you want to learn how to do this kind of analysis and place these trades, this is the newsletter and that is the show you want to watch. All first-time subscribers get a 30-day money-back guarantee. So if for whatever reason it doesn't work out for you, you're just too busy, go ahead. It is risk-free. And you also get access to his archived webinars, which we actually have some that are relatively recent. So Basil, how are you doing?
I'm doing well, Jacob. How are you?
I'm doing well, too. We're having a little bit of stormy weather today, but that's actually kind of welcome. So,
stormy weather.
I love it. I love it.
Yeah.
Basil, what are we looking at today? We got a lot of news, so.
Yeah, we've got a lot of news, but the chart doesn't really care too much about the news. Look at this. Yeah, we're looking at the daily Dow, and the objective in the Chapman wave is always to get you from a buy signal at a low, and we alphabetize each higher peak, A, B, C, D, E, F, G, but the fourth highest peak, peak D, is really the objective once the price gets upgraded from a buy signal to a buy mode. Here's the monthly chart on the right. It's at a peak C. There should be a higher high in 2024, an all-time high to come for leg D. You've got a D in the weekly chart, and you've got only a B in the daily chart, and that implies that we should, and the stochastics at 95%, that's fabulous. That's what you want. The unbalanced volume is a little bit overbought. That's why we got that little pullback for a day and a half. And you've got the MACD strong, and this gray line right here is the relative strength. That's actually holding very nicely. Most importantly, the 9 period, the 9 over the 14 to me is really imperative to monitor. A chart I was trying to find for you last week when we spoke, I just discovered just a few moments ago. I said, oh, this is the chart that I was talking to you about, but I clicked and I hit the little minus button, so I lost it somewhere in the myriad of charts in the background. But this is the chart I wanted to talk about, and that was already last week. So that's 1, 2, 3, 4. That's when we were over there. in the Dow. This is the Dow chart. I call it the Chapman Wave Dark News Index. One of the reasons that I use the Dow chart for that, one of the things I look at is there is always something overhanging the market that should take it down. But a lot of the time, the market just ignores it. And there are moments when the weight of evidence of something that's perking out there is the market says, I don't like this. And right here in March the 20th of this year, this little rectangle that I drew in there, I said, we're getting a little bit of dark news. I call it originally dark news cloud cover, but I've changed it to, because there's an implication with a candle called the dark cloud. But what we're looking at here is that's where there was a lot of nervousness about the interest rates, and look how the market pulled back. Mm-hmm. So I have a technique that I worked on years and years ago, where I look at, I think of the market, big happenings occur with like an earthquake and then the aftershock, and how the markets react is really important. And all of these you can see, I've got IL for internal low, residual low, and then you get a big spike. Then you get the dark news cloud cover. Here, this is back in July of 2023. And each one of these is where there's enough nervousness to say we're going to go down. And then we've got an internal low and a residual low with that low that was made October the 27th, and we ran up. And then I said, I'm putting this in here because it's not, there isn't enough news to make it relevant, but it's just enough to go sideways. And this is where we went sideways from December the 15th. Then we ran up. Look, the green 9-period moving average from November the 3rd was positive all the way through until I started to get that on the 20th of March. I said, this is where there's a good chance we're going to pull back, and which is what we did. And then what the chart I wanted to find last week was to say, I think that we've made an internal low. That's the earthquake. And then the aftershock sometimes is stronger, sometimes weaker, but that's the aftershock. And I said, if that's the aftershock, I was going to say to you, if that's the aftershock, the buy signal that I've got, which is upgraded to a buy mode, should take the Dow to at least a leg D. And here we are, we're actually only in B. And that says this whole area going to the all-time high, it's still relevant right now. So I want to get out of this and say, so we are still long the Dow. We've added to this position. We're anticipating using this left side, right side price time matcher technique that I discussed and I show in my webinars. It says that later in this week, first of all, we have to make a leg C, which will be over yesterday's high. And if that's done today, it extends leg B. The day's young. I was showing in the den that we had, look at this. I talk about peak Ds. Well, there it is. Here's the 5-minute chart. Here's your leg D in the 5-minute chart. And here's your leg D in the 10-minute chart. So this is a relevant technique, whether or not you're talking about a 1-minute or a 5-minute or a monthly chart or a yearly chart. It doesn't matter. It's the same principle. Oops, I typed in an E instead of a D. So this is live. This is exactly what we were looking at a few moments ago. We were waiting for this leg D. Now, a couple of things that I wanted to look at is over the last week or so, I've been talking about the Russell small caps, how they've been lagging for forever, since the high was made back in November of 2021 at 244.46 IWM is the symbol. And then we've come down, we've made this pattern. I went through it this morning on my show. It's this arch formation that eventually can become a cup if the price starts to close above the arch high. So we're starting to see that improving in the monthly chart. The weekly chart is acting very well, but it needs a little bit more to go to test the 211 high that was made on the 28th. And here's the daily. So the daily says we might take a little longer, but the 211.88 level will become a viable target to the upside if we can break above. And this is another technique that I discussed. This little great green dashed line is called the Chapman Wave inside wedge target resistance line, dash green because it's going up, and that'll be the resistance that it needs to break. And it's right there at the resistance right now. So we're actually long the IWM for the very first time, and I can't even imagine how long. So that's important for us. And then looking at something like the XLF, which is really, the XLF is the S&P Select Financial Spider Fund. It's actually doing really well. So to me, that was really important that the XLF, the financials, move much higher from the lows that they were making just a month and a half ago, and they are doing that because I want to see the financials showing that there's that particular sector is showing viability and acting very well. Because if it was fading here, I'd be a little nervous. So it is, and we have a stock. We have Bank of America. We're still long from the 31s. It's at 38.58, and I like it because it's making new recovery highs. It has a long way to go to the 50.11 high of February 2022, but coming back from the low of 25s just back in October, that's really important. So there are a lot of positions that are actually starting to act very nicely right now. So at this particular point, I'm still looking for a D, at least in the Dow, and then we're going to have to start being careful.
Fantastic. Basil, thank you as always. And seriously, guys, if you want to learn more, the webinars and the newsletter opening call are perfect. We'll see you tomorrow at 10, Basil.
Thank you very much.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Tigers, you've seen his show, you've learned from his webinars, and now it's time to trade side by side with him. Join Larry Pesavento for the second month of his new service, Live Trading Fridays. Hosted in the Tigers Den trading room on Discord, Larry has analyzed a number of commodities and indices, placed profitable trades, and explained his method. Whether you're new to trading or are a seasoned market veteran, trading side by side with a titan like Larry Pesavento will only enhance your game. Utilizing Fibonacci retracements and ABCD structures, Larry provides decades of insight into when to place trades, when to exit, when to ignore, and so much more. Learning is doing. So if you're serious about learning technical analysis and becoming profitable in this uncertain market, Live Trading Fridays is a must-have tool in your arsenal. Live Trading Fridays occur every second and fourth Friday of the month, so trading events for this month are May 10th and 24th. If you're serious about trading, we'll see you there. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Now, I want to say we just had Basil Chapman on, and what I'm going to say next, this is for the new people we have watching, because we've actually gotten quite a few new viewers, especially on YouTube as well. But, you know, I'm on Instagram on these things, and I see a bunch of these ads and stuff like that on there are people who are like, you know, going to teach you how to trade and all this. And, you know, I've just doing like, intelligence research. I've looked up and listen, it's like our people, I have Basil Chapman, right? Tom O'Brien, Larry Pesavento. These guys have been trading for longer than most of these guys on Instagram have been alive. It is amazing. I majored in finance, right? And everything I learned about at least stock trading and even like management was way more from this company in listening to these webinars and reading these newsletters. And so I really want to recommend to everyone new here to at least check it out. Again, we have a 30-day money-back guarantee on all of these newsletters. So if it just doesn't mesh with you, that's totally fine. We get it. But check it out at least. So anyways, every Tuesday, we also are joined, now Tuesday and Thursdays actually, we are joined by Tim Ord of the Ord Oracle. Now, talk about someone else who's been in the game. Tim Ord, I love his input, and I know all of you guys love his input as well. We are super excited to hear from him today. Tim, how are you doing?
Good. Glad we're back on, and markets are working well.
That's right. That's right.
Let's take a look at them, see where we are.
Absolutely. Let me pull up chart 1 for you right now, Tim. Good, we're cooking right now.
Right, chart 1, anyhow, the second window up from the bottom is the XPX VIX ratio, and it leads the S&Ps. Anyhow, the shaded, this green area, I got across the chart. Chart goes back almost 2 years. But anyhow, when that ratio is making higher highs, which is second window up from the bottom, and the S&Ps are making lower highs, the SPX VIX ratio, I guess, is the dominant indicator suggesting that once that starts hitting new highs, the market at some point will start to hit new highs. And I pointed out the times in the past, going back to that April period of 2023, S&Ps, which is that first shaded area off to the left, the S&Ps were trading sideways. That ratio was hitting higher highs. You had a mild consolidation for, this is a weekly chart, for a couple of weeks. Then finally you start breaking new highs. Same thing happened back in November of last year. The S&Ps are up against the previous highs, and that ratio starts breaking new highs, and finally the market starts going up again. We have a similar situation where the S&Ps are actually knocking on the door of the March high here. We haven't quite hit it yet, but the ratio already hit a new high here last week. So we may see a little bit of resistance at the previous highs, but the ratio suggests at some point we're going to keep making higher highs. So your midterm scale remains bullish. And actually even the short-term scale here, it's not even bad here, but your midterm trend remains bullish. What happens if the SP starts making higher highs and this ratio makes lower highs is when you have to worry, and that's not happening here. So we already hit new highs. At some point, the SPX is going to hit new highs according to this ratio. Hang on, let's flip to chart 2.
Yep, give me one moment here. Perfect. We have it up right now.
Right. This kind of just, this is just a short-term indicator. It looks out, it's a daily, the second window down from the top is the SPX tilt ratio, which is basically the SPX to bond ratio. And the top window is a 10-day RSI for that ratio. And what this ratio is good for is predicting short-term highs. And the highs are not usually significant. Sometimes they can pick out significant highs, but usually when that ratio gets up around 70 and higher, normally you'll have a week or two of consolidation. And all those blue lines across the chart are times when the RSI hit 70 or higher of the SPX tilt ratio. And if you notice, you'll get a week or two of consolidation before it goes on higher and higher. And right now, we're coming in. When I did this chart earlier today, we're at 54.20 on the RSI. So even on a short-term scale here, we're not seeing any high, even on the short term. And I was kind of looking at this ratio. I thought, geez, we'll start a pullback here. I thought earlier in the week. Today's Tuesday, and we're not really seeing even short-term signs. And the market, if we're up again today, which looks like we will, we're up 9 days in a row, which is extremely rare. I'll put it that way. That's almost 2 weeks of every day being an up day. And short term, according to the RSI, up around 55, we may go up to the highs of March and eat right through them. So normally you get new highs, you usually test them, kind of back away, test them again, and either you create a top of some sort or you just bang right through it. And right now, I have to say, the March highs at the moment with the chart 1 and chart 2 here, we're not seeing any signs of a high here. So I'm thinking that the market may just keep pushing higher. Here's flip to chart 3.
Yes.
And here's this is quite updated today, but today, if we're up again today, which looks like we probably are because we're up close to 0.5%, we may back off for the close, but probably not. But yesterday was even up. This chart only says we're up 7 days in a row, which is higher 100% of the time within 5 days, where we're actually up 8 days yesterday, and today will be 9 days up. And I don't really have it circled here. You can't quite tell, but we're basically banging against the March highs right now. We haven't quite touched it yet, but eyeballing it, we're probably less than half a point away from that high. So will we hit it this week? There's a good chance we probably will. The VIX which is the second window up from the bottom, is not really giving any signs of a top, even though we did bounce up yesterday. Today we're down a little bit as the market's up, which is normally what happens. And we're not too far from the lows that happened back in March. So normally you get close to highs, you'll see a spike in the VIX first before you see a spike down in the S&Ps. That's not really happening here. We got the VIX gone up a little bit, but not of any consequential matter. So I'm thinking we may keep just pushing higher here short term. So.
Tim, when we get back, we actually have a question for you in the den as well. Just asking about your source for trend, but folks, stay tuned. We'll be right back with Tim Ord of the Ord Oracle. Okay.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. We're with Tim Ord of the OrdOracle.com. Now, Tim, we actually have a question for you in the den. One of our guys in here, he asks, if you have a new source for trend data. He's saying investing.com data is no longer being updated historically, and he was wondering what your source is for trend data.
I do swim, which is been accurate for what I can tell. I know stock charts doesn't really have an accurate trend either, but stock charts is closer. But I use Thinkorswim. It's kind of a real-time trading platform through Schwab. It's free, but you got to have an account at Schwab. But anyhow, that's who I use. Matter of fact, if you look at chart 3 there, I got some trend data in there. That pink area I have kind of shaded in there. That's all the times that trend readings were above 1.2. And if you notice, you get clusters. Once you start seeing panic, that panic usually continues in that area. So if you're coming off of a top real quick and the trend pops up real quick, chances are you're going right into a low. But anyhow, Schwab has Thinkorswim, but you have to have an account there to get it free. Stock charts is pretty close to accurate. It's good enough for how I use it. So there's only two courses. That's who I use anyhow. So
okay, thank you so much. Awesome.
Okay, you want to move on to next chart, or is there another question?
I think that was the only question. Let me check the host chat quickly. Oh, actually, Tim, we have a caller right now. Mark in Fort Collins has a question about trend, I believe. Mark, are you there with us?
Yeah, hey, this is Mark. How are you doing?
Awesome, Mark. How you doing? We'll go ahead. I'm interested to hear.
So I'm looking at the trend readings for the last 5 days, and they seem to me to be really coming down quite a bit. They're like an average of less than 1, and only like 0.5-ish the last couple days, the 2-day trend. Does that indicate anything for you on a pullback? Or because I know before you were looking at, if it was staying over like an average of 1.2 for 5 days, then the market would continue higher. Is that incorrect or correct or what?
Well, yeah, actually, for some reason, the trend works better at lows than it does at tops, because I've seen actually the 5-day trend get down around 0.5 and the market still continue higher. So I've noticed the trend has been, let me see what it is right now.
It's like 0.51, something like that.
Yeah, 0.53 on Thinkorswim. I think it was close to that yesterday, too. It's not necessarily bearish. It can be. I do watch the trend. Sometimes you get pullbacks, sometimes you don't. Actually, for probabilities, I wouldn't trade that, because sometimes you'd win, but a lot of times you'd lose. It's not a high probability trade. The trend going into lows is a lot more accurate, a lot more reliable than the ones that's going up. So that's what I found out through but they can mark highs, but it's not that reliable.
Okay. Yeah, I think the other, like Basil uses it. If he gets a really high trend reading, and he looks for the market to continue, like the S&Ps to maybe have a 10 something point bounce. And if he gets a really low trend reading, he looks for, sometimes it gets a rug pull the next day, where you get a pullback around that number of points, depending on whether you get the higher or the low readings on any given day. I think around a +2 or a 0.5.
Yeah, you can point. Yesterday we put 0.78, but the close around 0.5 is something to pay attention to. But usually, it doesn't predict anything. In most cases, maybe a slap in the face before it hits higher. But I don't know. I've studied the ups and lows, highs and lows, and all of this. The 5-day, 10-day, 21-day, 2-day. Matter of fact, you get a 2-day trend that adds up to 3 a lot of times. That's a bicycle right on the close, because next day they don't even let you in. But that works about 80% of the time. I can point out a couple of times that it failed, but all of them go into lows. So, matter of fact, this last trade I made it early. I made it on April 12th. I got long. The actual low was April 19th. The reason why I went in, you had a 2-day trend that did add up to 3. And I knew normally the next day is a low. It wasn't the case at all. The market went down for another 3-4 days, which is real rare. Most times, you get a 3-day trend that adds up, or a 2-day trend that adds up to 3 the next. It's not that day if the next day is the low, but that particular case, it took about 4 days for that low to get in. But 90% of the time, if you get that much panic in that short period of time frame, it's usually a bullish intermediate term sign, even though it's not a exact day of a low. So, but anyhow, getting back to that trend at 0.5, I know what you're talking about, but it's not reliable. I'll put it that way.
Okay, good. Appreciate your time. Thanks.
Thank you.
Thank you, Mark.
Thanks for calling in.
All right, fantastic. Yeah, thank you, Mark. And guys, if you want to call in and ask questions, just call us in. Let us know. You can even ask us in the den or in the YouTube as well, and can always relay those questions to Tim. So anyways, Tim, we were looking at chart 3. I know we have a few more as well. About 2 minutes and 20 seconds till the next break.
Yeah, let's go to chart 4.
Perfect.
This is really starting to work out pretty well. It's been a kind of a long wait, but anyhow, chart 4. This is a momentum indicator. It's already gave a buy signal several months ago, and so now you want to have momentum to turn up. And so we're on a buy signal, but sometimes these buy signals last 2-3 weeks, sometimes they last 2-3 months. How do you know that you're going into a multi-month, if not a multi-year rally? Well, these momentum indicators tell you what's going on. This is the weekly GDX. The top window is the weekly GDX. The next window down is the weekly cumulative advanced decline for GDX, and the window below that is a cumulative up-down volume for GDX, and the bottom window is the weekly GDX GLD ratio. And so I circled in blue the times when they crossed the mid-Bollinger Band. And right now, all 3 of those 2 indicators have crossed the mid-Bollinger Band. And I guess they got to hold above the mid-Bollinger Band until Friday. That's officially when it becomes that this momentum weekly indicator is kicked in. Previous times when these kicked in, you got a 4-year span, a 1.5-year span. Last time I gave a sell signal when all 3 of them kicked in was back in January of 2021. That remained pretty much on a sell signal. In 2023, they did get above their mid-Bollinger Band, which is basically the only fail signal that it had going back to 2009. That turned up, it turned back down. Now we're back on the buy signal again. Anyhow, it looks good. So I'll hold.
Perfect. Yeah, we'll be right back, everyone, with Tim Orr, the Oracle.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. We're with Tim Ord of the Ord Oracle currently. We got a short segment here, but we still got a chart or two left to run over. I know we were just talking about the GDX. Tim, what else are we looking at?
Well, we just talked about the weekly, which all flipped to a buy signal. So let's go to chart 5. This is a monthly. And over to the right there, I have kind of a blown-up window. And the top window is a monthly GDX. Next one down is a monthly GDX DLE ratio, which is at its Bollinger Band right now. We're smack on it. And the next window down below that is a cumulative monthly advanced decline. It has closed above its mid-Bollinger Band. So that's on a buy signal. Both those are actually on a buy signal. And the bottom window is the GDX up-down volume, which is still a little bit short. That's the reason why I circled it in red. Not quite crossed it yet. But if GDX holds here or moves higher, chances are, before the month's out, that will give a buy signal too. So let's flip to chart 6.
Yep.
And this is the really short term. This is kind of measured anyhow, the bottom window is the 50-day average of the up-down volume. Just measures the up-down volume on a 50-day average, which is about 2.5 months. When those indicator is above zero, the market's in an uptrend. And over the last month, we've pretty much gone sideways. But this indicator is well above zero, so it's not backing down. It's actually remaining strong, if not moving higher on a short-term basis. That suggests we're probably going to have a sign of strength, what I call a neckline, which is the top window of GDX. We'll probably have a sign of strength through that neckline. This head and shoulders bottom, if you do the measurement, it comes around about a 50 target on GDX. We're around the 35 range right now, so we got probably another 15 points to go for that measurement. So the short term remains strong on GDX. Doesn't look like there's going to be any worthwhile pullback here.
Love it. Tim, thank you so much for coming on, guys. This is Tim Ord of the Ord Oracle. He's on with us every Tuesday and Thursday on the Tom O'Brien Show. Thank you so much for joining us. It was a fantastic day. Hope you all have a great and safe evening. Tim, thank you so much.
Thank you.
Take care, folks.